weekend all. Ira Epstein with your financial market wrap-up, and this is your weekend edition for September 29, 2023. And this is the UAW expanding the strike day and probably one day away now from when the U.S. government shuts down and gets into a big battle. This shutdown never had to happen. Everybody always waits in Congress for the last minute. You know it. I know it. Ask your friends. They'll tell you that's how it works. And we got what they wanted to do. They've got a battle because this is where the political cash is bought. Now the Democrats will go out and be able to say, look, the Republicans are so dysfunctional, which they are. They can't get anything done in the House, and they have caused this. I agree. But the Republicans will buy political cash and turn it around and be able to say, the border situation is out of control. We're not going to do anything about it. We keep spending as though the pandemic is just forever going on, and we've got to throw money at things, and there's no pullback since the COVID pandemic, and that fell back. And now we have debt that we can't service, and it's just driving rates higher and ruining everything. You're going to get all these arguments playing out. They're both right. What can I tell you? They're both right. And that's what's called compromise. But the battle may not be as short as you think it is because there's hardliners at work. We haven't had this in a very long time where there's a gang of them. Now, it'll get bad enough with public outcry at some point to force something. But you got to get to that. You can't have a president that immediately comes out, we're not going to fund any more money for the border. So we're going to throw all these billions upon billions to Ukraine, and we can't take care of ourselves. If you live in a big city, and you know I've said this over and over, drive around. Drive around a big sanctuary city. You tell me what you're seeing. Help is needed, and it's not wanted to be given, and it starts at the top with Biden. Why is beyond me. I truly don't know why. I'm not picking on him. I don't get it. If you're going to not take care of the border, then you got to take care of the city. If you close that all down, you really wouldn't have had the problem with all this migration into these cities. Chicken and the egg. All right. So how did the market react? It was so strange. You know, we started with a rally today. I think you saw that. And by mid-session, it changed. Now, one of the things I was telling clients, and I don't know that I'm right, but I suspected I was I said, you know, we're at the end of a quarter. We're at the end of a month. Money managers want to be paid. If they had a good time, they cash in, lock it in, take another look. And they can use that excuse saying, listen, I don't know if we're going to have this shutdown of the government where we're at. It's a dangerous time. Interest rates are high. People are saying they're going higher, blah, blah, blah. By the end of the day, everything came apart. What I didn't get in the silver market today, and it was a wild one, I watched the market go up $1 an ounce this morning. And I'm looking at everything around me and I'm going, I smell what's called a fat finger. A fat finger is electronic jargon for when you mean to put in an order of, say, a 10 lot, and you put in 100, or you put in 100 and it becomes 1,000. It's called a fat finger, an extra digit. I can't prove it. I haven't heard one word about it. There was no other reason for that. And from there, it reversed course and fell, closing near the lows. It fell back $130, $140. $1.40, not 140, $1.40. Wow. You realize how big, on a full-size contract from top to bottom, it's $7,000. I mean, it's huge by any stretch. If you're looking at the energy, we're in a bit of profit taking in the crude. The heating oil staying up a little more than the others. You know, people are getting ready for the winter time as they see it. Bonds and notes, a little bit of profit taking finally. And in the grain market, we had the quarterly stocks report, which were out and out bearish as can be for the wheat market, bearish for the beans. It really wasn't bearish for the corn, but the corn got pulled along because of the others, because there's price considerations between the two contracts. In the dollar, down a little bit at the expense of currencies, but they didn't go anywhere. So let's go to the chart. And on the weekly edition, we try to function nicely by just looking at weekly charts. So first thing, the monthly area chart of closes, monthly. For the month, you were down in the Dow 4.22%. I'm so glad it's the end of a month. I told you that the odds favored September would be a weak month. Historically, it is. And not this week, but last week would have been one of the worst losing weeks of the year, and that was too. So you had both those events take place. But on a monthly basis, you still have a lot of support waiting for you at the 41 level. When we take a look at a weekly area chart of closes, you got under and you have stayed under now the market. Now, this week you were down 0.81%. If I step back from there, last week you were down 2.91%. The week before you were up a little bit. So this decline is brand new, as the saying goes. Yes, you're down hard from the highs, but what you are is you've just added this new leg to the downside. And both of those charts tell you one thing. Let me come back to that. When you're on the weekly chart under the 18-week average, I have a bearish bias. When you're on the monthly chart over that average, I have a bullish bias. Depends on the time frames you're looking at and the bigger and bigger and bigger pictures. So as I take a look at the chart right now and look at this, I put the swing line on and I have a bearish picture. Lower highs, lower lows. That's the first thing you learn. What is a trend? Downtrends have lower highs, lower lows. The swing line is a study I developed. I'm redoing my whole charting course. I'm excited about it, as you can probably tell as I keep talking to you. I'm putting lots of things in it right now that I never did before. It's going to be the best one I ever did. And then I don't do them for another 5 to 7 years. They last that long. So look for it. I'm working my butt off to try to get it by Christmas. I hope I can. But lower highs, lower lows, under the 18-week average. In terms of moving averages, the next support's 4,200. I make you a promise. You're going to hear traders, if you listen, they're going to say the 4,200 level is a very important level in the S&P. I heard it today as I was listening to the CNBC, and they're going, if that 4,200 level is breached, where could you go? Well, for me, it'd be back down potentially to the 200-week average. They were saying the 41. I think it's worse than that. I think it's down here. But to do all that, you got to get through a key algorithm. And that's right here where the support is, 4270. The odds of staying outside of Bollinger Bands, up or down, is 5% of the time. So you always pay attention to that. So the bigger support, you're in the area. Just listen to what I'm saying from a chartist point of view. From this 4270 down to 4204, that should be a stiff support zone. That does not mean I'm saying buy. The market's in all kinds of sell configurations here, but it is an oversold territory. As we come together and we look at the Dow, as I look at the market, lower highs, lower lows, but again, you're down to the 100-day average. You're down over to the Bollinger Band, and you're oversold. I can make all kinds of arguments, throw the name off the chart. If we were sitting together, this is where you're covering shorts, not adding the short positions on a longer-term position. I didn't say buy. Covering shorts is very different than going long. In the Russell, the same thing. I'm in the bear camp and looking on this chart and saying to myself, uh-oh, you're getting down into the support zone there too. I think you see it very easy. Then in the 5-year notes, are you going to latch on to the lower Bollinger Band and get that Gorilla Glue trade? You easily could. You already have the embedded reading. That rules the day. Until the red lines closes over 21 on a weekly chart, this market is a sale on rallies if you can get them. There's a certain way to do it. If you haven't learned how to work with my enhanced Bollinger Band course, this is classroom stuff. Go on the website, iraepstein.com, under education, and take a look at it. And that's where this starts carrying the market. Same thing in the 10-year note. Embedded reading, latched onto the Bollinger Band, No, you can keep going down. And yes, you always against that band are covering some shorts, but with the embedded reading, you don't give up your total short position most of the time. In the dollar index, are we going to embed? Stay with me. Week 1, where both numbers are over 80. Week 2, that was here. I should have 3 of them. Yep, do. Watch. Not here. Week 1 on the 15th. Week 2, the week of the 22nd. Week 3 just finished. So what that tells me is there's a way that if the market just starts correcting, I expect to see new buying coming into this market. In plain English, this move doesn't look over by any stretch of the imagination. I will change my tune, and I know you'll write me about it. Oh, he changes. Well, that's what charting's about. If the red line closes under 79 on a weekly basis. Until then, I don't change my tune, which means I'm probably bearish in the euro to a degree, but it didn't embed. Now, I'm not as bearish the euro as you might think. And on the daily charts, you lost the bearish embedded reading. Now, it can gain it back the day after it's lost. If you take the course, you learn how that all works. In the Canadian dollar, I don't see a trend. I see a lower low and a higher high scenario going sideways. In the Japanese yen, the government pulled a quickie today. The Bank of Japan, out of nowhere, put out a flash auction of types trying to support the yen. It rallied during the day. It gave it all up by the end of the day. As I told you, the professional traders are going to challenge the Bank of Japan over and over. I've seen this happen until the bank does something that really convinces them not to challenge the bank. The bank has not done that yet. Until you lose the embedded reading, rallies are probably going to be sold, looking for even lower levels. Bitcoin drifting, that's the best word I can use. The trend is down on the weekly chart, not the daily charts. And the market, to me, has resistance at the 18-week, but to get there, you lose the downtrend. I don't see how you can do anything with that. Now in Brent, this chart's not wrong. Remember, we had a negative number in May of 2022. People forget that on the differential, and then the market took off. And this is a manipulated market. It's really that simple. It is run temporarily, very well, by the combination of something called OPEC Plus, which would be illegal in America because it's price manipulation. But they get together and they throttle back production to suit them, and then they come back the other way. It's a tax on everybody. And they keep driving prices higher, as you can see, but you're not at peak levels. Please understand this. You go back to 2022, you had a much higher price level at one point. So they are throttling and controlling it, but they are not up to those other prices, and nobody's going to cry uncle just yet. So it's still very much a bull market. It's embedded. Pullbacks are likely getting bought in the WTI, still looking for higher. But as I teach, doesn't mean you have to listen to me. I tell traders to never buy over a Bollinger Band or sell under one. But I do say that if you're buying the breaks, you want to take some money off against it. And if you're embedded, you're trying to hold on as best as you can to a core position. In the heating oil, the weekly chart, I have done my best to tell you, you don't want to be in gasoline. And I've said this since Labor Day. You want to be switching over to heating oil. And the reason is you're not going to drive as much. The kids are in school, blah, 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 blah. But we're going to be turning on the heat. Now, I have, in the month of September, I did one night turn on the heat in my home. And wasn't to test it. I got chilled. All right, it does get down at this time. You wouldn't believe it with the week coming up in Chicago. We're going to be in the mid-80s all week long. But we got into the 40s one night, and I got cold. And I didn't care. I told my wife, I'm turning on the heat. She goes, well, we don't need heat. I needed heat. You come down here, I'm looking for the 100-week average to be offering the support. The market has proven it's over at 2 months that could be a support level. If the red line closes under 79 for the time being, I wouldn't want to be long. Until that occurs, I think the pros are going to buy, looking for the 360s to get up there. So you put it together, and what do? Well, right now you need help. You're not going to get government reports for weeks on end. We cover so much. At Linn, we are writing newsletters all day long. It's not me. I don't have time to do that. I put out my own subscriber letters twice a day. They have a crew of professional writers, and they're covering everything. It could be the soft markets, the energy markets, the stocks, then the charts, the price counts. You want to look at price counts to get an idea of when a trend kicks in, where might it go? It is not a trend generating tool. It is nothing like that. It is where might the market go in a series of steps. The first one's a very high probability, then they drop off and they carry you the rest of the way. They put these out one a day minimum, and then over the weekend they put out a whole slew, a book of them, so that you get them. You can get this for free. Go to our website, iraepstein.com, our newsletters, my research. You can try if you haven't tried it before, or do nothing. Enjoy getting nothing, okay? That's your call. But it's all right here. All you do is click it. We made it work like a cart. You put in your name, your email address. It's all we really need, and away you go. We're going to get everything out to you. It's that simple, okay? And it's going to come by email. So if you want to learn that, terrific. If you don't, why not? I'm Ira Epstein. You have yourself a great weekend. I'll see you Monday.